Hello TTS team, short one for you, just going over what a market structure shift is and what a fair value gap is, why they're important to me and Tom, why they're important to the market and what they actually do. So I'm going to use the two GBP USD trades we've had running this week just so it's something a bit more familiar. Here you can see the buy from Tuesday that's taken out TP1 and hit our break even, and here's the sell that we currently have running that has hit TP1, looking like it's going to run towards TP2, but as you guys know, the trade isn't over till it's over. So let's see how that goes. Right, market structure shift. So let's look at Tuesday. What is a market structure shift? Simply, it's a piece of evidence that shows the structure of the market is being disrespected. Say if it was bearish from the day before, we're looking for signs that it's now switching to bullish. So let's have a look at this. Here you can see from Asian session all the way down, we're creating lower lows, lower highs, lower lows, lower highs. This one's a bit of an outlier, but those happen. The market isn't perfect. But anyway, we continue on down, lower low, lower high, lower low, until eventually, here you go, we've broken out of that. So let's see this here. So what we've done is we've taken out the previous high, which shows that the market is disrespecting the bearish trend, and we may or may not be switching to bullish. But what we're looking for there is the bullish switch. And as for this sell that we currently have running, same thing going on. So higher high, higher low, higher high, higher low, higher high, until eventually market disrespects it, and we have our market structure shift, which indicates we're moving to the downside, which we have done quite nicely. Now, fair value gaps, what do these have to do with them? So when we have a strong market structure shift, we usually leave behind a fair value gap. A fair value gap is simply seen as almost a gap in the candles where price hasn't retraced to. If you've been watching the charts and analysing, you know that price likes to retrace and react. That's what it does. Simply put, a fair value gap is where we've moved through so quickly, either going bullish or bearish, that price hasn't had a chance to kind of react to that level. So what we're looking for is price to come back and react to that level, which in the whole of the markets is pretty high probability that will react. So as you can see here, we've drawn on our fair value gap just where it happened, and pretty much instantly we've had a positive reaction of it, and we ran. Unfortunately, price did dump. We didn't quite stop loss, but then news came into our favour and has moved on upwards. After news, we did create another fair value gap, which for me kind of made the trade seem more promising. And as you can see, we continued on upwards after reacting once, continued upwards, hit our TP1, came back down and reacted to that one again. So that was a pretty strong level. As for the sell that we currently have running, let's have a look. So this one created a few fair value gaps. I like this top one simply because of where it sat, my stop loss, and because there was this fair value gap up here to help us out. So price slightly reacted to it. We created some wicks, but we did mitigate it, and that's why I put it here, because I was hoping that this fair value gap would kind of be our support, and it was. We hit that and we pushed on down, and now that's simply how the trade's looking. And yeah, that level was quite good for us. So I hope that clears up a little bit about what fair value gaps and market structure shifts are. A little bit more of a technical video for you, so you kind of understand what me and Tom are on about when you see us put MSS and FVG. I hope that helps, and yeah, good night team. Thank you very much.